All right, today we are diving deep into the e-commerce titan Shopify. We're going to deconstruct it through the eyes of an expert analyst over at the research firm Morningstar. So, what did they find? Let's get into it.
So, what's the deal with Shopify stock, really? When you boil it all down, the professional deep dive report lands on three core conclusions. And, they kind of contradict each other.
First up, the big one. The analyst says Shopify has what's called a wide economic moat. Now, what that really means is they have a super strong, defensible, competitive advantage. It's like a castle with a massive moat around it, protecting it from all the invaders. It's a real fortress in the e-commerce world.
But, and this is where it gets really interesting, the report also gives the company a very high uncertainty rating. So, you've got this powerful, protected fortress, right? But it's surrounded by this thick, unpredictable fog. It's this fascinating tension that's just central to the whole Shopify story. And here's the final piece of the puzzle that makes it all so compelling. After weighing that super strong moat against all that high uncertainty, the analyst's final verdict is that the stock is currently undervalued. So what is going on here? Let's break down exactly how they got to that conclusion.
Okay, to really wrap our heads around the analyst's take, we first need to be crystal clear on what Shopify actually does. What's the engine that powers this e-commerce giant?
And this quote from the analyst, Dan Romanoff, just nails it. They aren't just selling a piece of software, they're trying to be the entire package, the all-in-one platform for anyone who wants to sell things online, especially small and medium-sized businesses. This one-stop shop idea is absolutely crucial to their success.
So how do they make their money? Well, it's basically two big buckets. First, you have subscription solutions. That's the monthly fee businesses pay just to use the platform. But the much bigger piece, and the one that's growing way faster, is merchant solutions. Think of all the essential add-ons like processing payments, handling shipping, or even getting business loans. It's what turns the platform into a complete, ready-to-go business in a box. Okay, let's get back to that fortress. That wide economic moat we talked about is the absolute core of the positive side of the investment case. So what exactly is this moat made of? Let's take a closer look at what gives Shopify its power.
First, a quick definition. An economic moat, a term made famous by Warren Buffett, is really just a fancy way of saying a company has a lasting competitive advantage. It's the secret sauce that lets them fend off rivals and make great profits for years and years.
Shopify's moat comes from two really powerful places. On the left, you've got switching costs. Think about it. Once your entire business is up and running on Shopify, trying to move to a competitor is a total nightmare. It's expensive, time-consuming, and you risk breaking your whole operation. Then on the right, you have a huge network effect. With over 10,000 apps in its store and a giant community of developers, it just pulls in more merchants. And of course, more merchants attract more developers, and the whole thing just keeps spinning, getting stronger and stronger.
So, the moat is strong, we get it. But remember that very high uncertainty? This is where that really comes into play. This is where the debate gets heated. Let's look at the case for both the optimists, the bulls, and the pessimists, the bears.
The bull case is pretty clear. Shopify is a leader, its growth is off the charts, and it's even starting to win over bigger corporate clients. But the bears, well, they have some serious points. They worry the stock is often priced for perfection, that being so tied to small businesses makes it vulnerable in a recession, and that it's starting to go head-to-head with some absolute giants.
And when we say giants, we are not kidding. Look at this. Shopify is a huge company, right? Market cap over $150 billion. But then you look at Amazon. It is just on another planet. It's more than 15 times bigger. That is the kind of financial firepower the bears are worried about. This chart here shows another key part of the bear argument, valuation. Those orange areas show you all the times the stock price was trading way above what the analysts thought it was actually worth. It has a history of what the report calls lofty valuations, and that can be really risky if the company doesn't live up to sky-high expectations.
So, we've seen the business, the powerful moat, and the intense tug-of-war between the bulls and the bears. After all that, how does the analyst land on the idea that the stock is actually undervalued? Let's look at the final verdict and the numbers behind it.
Okay, first, let's set our starting point. At the time of this report, the stock's last price was about $119 a share, so just keep that number in your head. Now, here's the analyst's bear value estimate. This is the price they believe the stock should be trading at, based on all their number crunching about the company's future, and that number is $160, a pretty significant jump from where it was trading.
So here it is. This is the whole ball game. Because that last closing price is so far below their fair value estimate, the stock lands firmly in the blue, undervalued territory. The analyst sees a huge gap between the market price and what they think the company is actually worth.
But what's driving that high valuation? It all comes down to this single number. The analyst's entire model is built on one critical assumption: that Shopify will grow its revenue at a compound rate of 23% per year for the next 5 years. Hitting that kind of growth consistently is the key to everything.
And that brings us right back to the central dilemma, doesn't it? The analysis shows a company with this incredibly powerful protective moat, but it's also facing huge uncertainty from the economy and from these gigantic competitors. To justify that valuation, it has to perform perfectly. So the question I'll leave you with is this: can Shopify navigate all these risks and grow fast enough to fulfill that promise? Or will the giants in the fog ultimately be too much to overcome? The future of e-commerce might just depend on the answer.